Tesla is not collapsing. Actually, the latest numbers show something very different. Europe is recovering, China remains strong, FSD is improving, and Tesla Semi is starting to look more serious in real-world logistics. But at the same time, Tesla's risks are also getting bigger. Legal risk, competition risk, shareholder risk. So today, I want to look beyond the headlines and talk about what these updates really mean for long-term Tesla investors. Hi everyone, this is Ken. Today, the key question is simple. Is Tesla's long-term story getting stronger, or is it becoming more complicated? Let's start with Europe. Tesla's May sales were much stronger than expected. France was up 655% year over year, Denmark was up 136%, Spain was up 113%, Sweden was up 71%, and Norway was up 29%. In France alone, Tesla recorded 5,446 registrations in May. Now, one strong month does not mean Tesla is completely back, but April already showed signs of recovery, and now May has also come in strong. So this may not be just a one-month bounce. It could be the beginning of a recovery trend. For investors, this matters because the market narrative around Tesla in Europe has been very negative. People talked about Chinese EV competition, political backlash against Elon Musk, and customers waiting for refreshed models. But if April and May are both improving, the idea that Tesla is simply collapsing in Europe may need to be adjusted. The next test is June and Q2 deliveries. Next, China. Tesla's Giga Shanghai recorded 85,982 wholesale sales in May. That is up 39.4% year over year and up 8.2% month over month. China is still one of the toughest EV markets in the world. BYD, NIO, XPeng, and many local brands are competing aggressively. But competition does not automatically mean Tesla is losing. The latest Shanghai numbers show that Tesla is still operating at a strong level both for domestic sales and exports. So my view is this: China is clearly a risk, but the data does not support the idea that Tesla is being crushed. For long-term investors, fear is not data. Now, FSD. There was a report that a 2026 Model Y using FSD 14.3.2 completed a drive across all 48 contiguous US states and Washington, D.C. without steering intervention. The total distance was 7,241 miles, or about 11,600 kilometers. That is a major milestone. It suggests that FSD is becoming more stable across different roads and driving environments. But we have to be careful. This is not full driverless autonomy. FSD is still a level 2 driver assistance system, and a human driver must supervise the car. So the right interpretation is not Tesla has solved autonomy. The better interpretation is Tesla is making visible progress, and that progress matters. But as FSD improves, legal risk also becomes bigger. In China, some Tesla owners are reportedly suing over FSD features and HW3 limitations. In the United States, there have also been lawsuits related to FSD marketing and refund claims. This is important because autonomous driving will not only be about software performance, it will also be about trust and responsibility. Who is responsible when something goes wrong? What happens to customers with older hardware? Does the name full self-driving create expectations that are too high? FSD is one of Tesla's biggest opportunities, but it is also one of Tesla's biggest risks. Next, Tesla Semi. Covenant Logistics tested the Tesla Semi for 2 weeks in California, including loaded driving through the Grapevine route. The Grapevine is a difficult route for heavy trucks with steep climbs and demanding downhill sections. For diesel trucks, speed loss, brake heat, and driver confidence can become major issues. Tesla Semi has a different advantage: regenerative braking. On downhill sections, the truck can recover energy while reducing stress on the braking system. Now, we still need more data. Energy efficiency, payload, charging time, battery level, and fleet economics are all important. But this test matters because it was not just a demo. It was a real logistics company testing Tesla Semi on a difficult commercial route. If Tesla Semi can prove strong economics in real freight operations, it could become an important part of Tesla's larger energy and logistics strategy. Now, Optimus and SpaceX. The humanoid robot market is getting much more competitive. Figure is moving fast. OpenAI is showing more interest in robotics. And Sam Altman-backed projects like Alfred are also gaining attention. This means Optimus is no longer just a Tesla story. But Tesla still has one major advantage: manufacturing. A great robot demo is not enough. The real question is whether a company can build robots at scale, lower the cost, deploy them in real workplaces, and keep improving them with software. That is where Tesla may have an edge. At the same time, SpaceX IPO and Tesla SpaceX merger speculation are becoming bigger topics in the market. To be clear, nothing has been officially decided, but if something like this ever happened, it could be one of the biggest events in Tesla's history. Still, investors need to be careful. A great company does not automatically mean a great deal for existing Tesla shareholders. If new shares are issued, dilution could become a serious issue. So the key question is simple: who benefits? That is how long-term investors should analyze this story. So let's bring everything together. Today's Tesla news has both strong positives and important risks. Europe is recovering, China remains strong, FSD is improving, Tesla Semi is getting real-world validation, and Optimus still has massive long-term potential. But the risks are also clear. FSD lawsuits are increasing. Autonomous driving responsibility is becoming a major issue. Optimus competition is getting stronger. And SpaceX-related speculation could create uncertainty around dilution and governance. So my conclusion is this: Tesla is not collapsing, but Tesla is entering a more complicated phase. This is no longer just a car company trying to sell more EVs. Tesla is becoming a platform company across AI, autonomy, robotics, energy, and possibly even space-related infrastructure. That creates massive upside, but it also creates bigger responsibility. For long-term investors, the key is not to react emotionally to every headline. The key is to watch the direction. Are sales stabilizing? Is FSD improving? Is Tesla Semi becoming commercially useful? Is Optimus moving from demo to deployment? And are shareholder risks being managed properly? Right now, Tesla's direction still looks promising, but it requires more careful analysis than before. That's it for today. If this video helped you understand the bigger picture behind the latest Tesla news, please hit the like button. And if you want daily Tesla updates with deeper analysis, make sure to subscribe to Life in the Future. Thanks for watching, and let's keep enjoying life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.